Hello everyone, I hope you all fine and doing great. And myself Raja Rukma, I take class for CMA Inter Group 2 paper number 10, Cost and Management Accounting and Financial Management. In the previous class, we see that capital budgeting payback period and accounting rate of return. Today we see that discount payback period class. Okay, we start with the discount payback period concept. This class, we see that whole discount period concept in elaborate. Before that, I just explain what is the discounted payback period, different between the okay. Okay, we start with the discounted payback period. I just explained that what is the discounted payback period. I got a investment. I got an investment of rupees 10 lakh. Okay, I got an investment of rupees 10 lakh in the year of 2010. Okay, I got an investment of 10 lakh in the year of 2010. I get profit, I get a return from the 2011 itself, rupees 40,000, and 2012 I get rupees 30,000. 2013 I get 20,000, and 2014 I get 30,000. Okay, like that I get a number of year of return I get back. Okay, hello. Sorry, the speaker is a problem. Like that I get. In the discounted payback period, the initial investment of 10 lakh rupees, that 2010, same as if you tell same value of money in 2011, same value of money in 2012, same value of money in 2013, and same value of year 2014 also. If you tell yes, means you are wrong. The value of a money is changing every year due to the two factor. Value of money changes every year due to two factor. One is interest rate fixed by the RBI, and another one is inflation. These two factor, it will change the value of money. In the payback period, in traditional method, we simply find out that how much payback that money we get. In that discounted payback period, we find out what is our current what is our value of that period. Value of we say that we find out that value of 2010. The value of 2014 of 30,000. What is the value of rupees 30,000 in 2010? In that we have some formula for that. What is the formula? discounted factor. Sorry for background noises. Equal to 1 divided by 1 into r the whole power n. This is the formula. R is given in the sum itself, that is a discounting factor, and n is given in n is a number of years. Like that, we do the sum accordingly. Discounting factor. This is the discounting factor. How we find out the discounting factor? This is the discounting, the present value of that. Past value. In the year I invested 2010, invested 10 lakh rupees. I get the return of 2014 is 30,000. In the 30,000, the value of 2010 is what? I don't know. That case, we find out the discounted factor and find out the sum, find out the answer of the discounting payback period. Okay, if you some confusion in that, I clear in that sum itself. Okay, I hope I clear in the sum. Okay, we start with the sum. If you have some doubt, you clear now. Just understand and go. In the sum, what they given, same as our payback period sum, we take it. In the discounted factor, they given project M has been initial investment is rupees 10 lakh. The cash flow for the 5 years is 3 lakh, 3 lakh 60,000, 3 lakh, 2 lakh 64,000, and 2 lakh 40,000. Here I wrongly typed that. Here discount, determine the discount payback period, assuming that discount factor, discount rate is not there. Discount rate is also known as discount factor is 10%. Okay. We find out the sum. First, they given you follow with me, do the sum. What is the formula? Total initial discounting payback period formula is total initial capital investment divided by annual discount cash flow. Okay. Number first year, number 1 year, cash flow after tax, discounting factor, then discounted cash flow after tax, cumulative discounted cash flow after tax. This is the heading. First year, second year, third year, fourth year, fifth year, they given. First year, how much? 3 lakh, 3 lakh 60,000 and 3 lakh. 3 lakh, 3 lakh 60,000, 3 lakh, 2 lakh 64,000 and 2 lakh 40,000. Discounting factor is 10%. They given in the sum. That rate is 10%. They given in the sum. we do it here. %, they given, that means 1 divided by 1.1 whole divided by 1. This first year, same as we follow as second year, 1 divided by 1.1 the whole power 2 equal to third year 1 divided by 1.1 the whole power 3, and fourth year 1 divided by 1.1 the whole power 4. Like that we do the number of years. In the calculator we simply do that. I show in the calculator. I hope it is visible. 1 okay 1 divided by 1.1 is equal to first year value 0.909090 is the first year value. We type it as 0.9090. We take approximately 4 decimal. Then second year 1 divided by, in the fraction 1 divided by 1.1 the whole power 2. We don't know how to do that whole power in the simple calculator. This only allowed in the examination. We simply do that. Again give that equal to button. We get the answer of 0. First we do that 1 divided by 1.1 equal to 0.909090 asking. Again simply only one you click that equal to button, we get that 0.8264 0.8264, and again we click that equal to, we get the third year value 0.7513 0.75. This is the shortcut method. We find out that discounting factor, and again equal to 0.6830 0.6830, and again we multiply that, again we equal to 0.6209 0.6209. In the fraction we get the decimal, sometime it will plus 106210 is there, 6231 is there. There is a note in the I simply say that in the discounting factor, the final answer there is a difference is there, the rupees of 2 or 3 like that. Exact answer we not get because of that discounting factor point they given. Some people are rounded off it, some people not rounded off it. So we do anything in that fraction point, there is a no mistake. Before that fraction point answer is they are seeing. Okay, we multiple that. Discounting cash flow factor is, this is 1, this is A, this is B, this is C, A into, sorry, B into C equal to D. 3 lakh into 0.9090 is that, we find out 3 lakh into 0.9090 equal to 2,72,000. Sorry, 2 lakh, 3 lakh, 72,700. I put the sum already. You just multiple with that B minus B into D. I want to save your time first. 2 lakh 97,504 and 2,25,390 and 1,80,312, 1,49,040. Like that we do discounting payback period. This is the format we solve the sum. They given the discounting factor, they given the number of cash flow after tax, number of year cash flow after tax. They also given the initial investment. We find out the discounted payback period. And we conclude cumulative discounting factor is add with the first year, we put the same first year 2,72,700 and the second year equal to 2,72,700 plus 2,97,504, 5,70,204, 5,70,204 plus 2,25,390 equal to 7,95,594, 7,95,594 plus 1,80,312 equal to 9,75,906. Here the payback period method, what we find out that exact 10 lakh where we match it, we find out that the number of year and we find out the month, we cross multiple with that. We stop with the fourth year. The payback period was discounted payback period is simple. That discounted payback period same as our payback period, but we find out that value of that 2010 itself. Okay. These all are the current year value. If we invested in 2010, that invested amount of 2011 is 3,60,000. For example, this is 2010, this is 2011, this is 2012, this is 2013, and this is 2014. Okay. In the 2010, the value of sorry, this is 2010 is not the next year. The next year the value is 3 lakh. This is the first year. 2009 we start that investment. 2009 we start the investment. The first year is 3 lakh we get. What is the first year current value is 2,27,000. 2,72,700 is the 2,09,000 value. And 2011 current year value is 2,97,506. Yeah, we get 3,60,000 cash flow after tax, but the current value of that cash flow after tax is 2,97,504, and the current value of that 3 lakh is 2,25,000. The third year value and fourth year value, that these are the current year value. Current value of that fifth year and sixth year. Because that inflation rate, we discounted it, we calculated that future value, we calculated the present value of that future investment. Okay. Here we stop with that fourth year. We find out the 4 year. We know in the fifth year they have 12 months. How many months we reach the 10 lakh? The difference of difference of 10 lakh and 1 lakh, 9,75,906 is rupees rupees 24,094. In the year, fifth year, 12 months is there. The investment is current value of that 1,49,040. Multiple with the 12, we get that 1.2 like that some years. We concluded that we get discounted payback period equal to 4 year and 12 months. Sorry, 2 months. This is the answer. As simple as that. In the discounted payback period, what are the things we see that discounted payback period is simple. Project M, my initial investment is 10 lakh. In the 5-year, cash flow of that 5-year was 3 lakh, 3,60,000, 3 lakh, and 2,64,000, 2,40,000 they given. The discounted payback period, assuming that discounting factor is given. What is the formula for discounted payback period? Total initial investment of capital investment, total initial capital investment divided by annual discounted cash flow. We find out the year of investment. First year we invested it 3 lakh, 3,60,000 like that we do, and the discounting factor I do in the calculator 0.01. How we find out? 1 divided by 1.1 the whole power 1. First year 1 equal to 0.909. This is the first year. That means the next year we get the 3 lakh. That next year is the 0. The value of the 1 rupee is 0.9090. The value of second year value is 0.8264. The value of third year is 0.7513. And the value of fourth year is 0.6830. And the value of 1 rupee of fifth year is 0.6209. We multiple with that value 3 lakh into that 0.9090 equal to current value. We find out 2,72,700. This is the simple concept. Okay. The 1 rupee value is next year it will be reduces as discounting factor. The compounding factor is increases the value. Discounting factor is reduce the value. Reduce the value, there is a 2 factor, interest and inflation. The basic concept is there. Discounting cash flow period is the basics of the payback period only. The payback period, what we find out in the traditional method, what the year we get the 10 lakh rupees in the we find out that under exact amount we want that month, we can calculate it accordingly. In the discounting payback period, we find out the exact amount of the current value of that money. We find out it. We get that value of 10 lakh in the 4 year 2 months. Is the modern method we find out the value. The same method in traditional method we get 3 lakh 3 years 2 months is there. In the modern method we get that amount of 10 lakh is because of the inflation. We find out that exact discounted payback period is 4 years 2 months is the discounted payback period. This only the correct method. The traditional method we not follow in the companies and in the examination also. In the examination you must see that what they asking. They asking discounted payback period. We find out it accordingly. They asking payback period only. You find out this payback period in the previous class. We see that video and you just follow the sums. Simple as that discounted payback period concept we follow completed. I completed that in the capital budgeting study note 10. We complete that payback period, ARR, and discounting payback period. All the 3 formulas and sums we do it. We go further in next class in other topics and other techniques we completed and complete with that comprehensive sums also, and concluded that capital budgeting chapter. The capital budgeting is the most important chapter. I said earlier classes also. So you just understand the concept, how to derive that sum. Simple that you know that how to derive the sum is known. You know means you just able to answer that question in the examination. Just practice more sums in the workbook and previous year questions. It will be help you, benefited for you. I hope this video is benefit for you, and I hope it is understandable. If you have any doubt, please ask me in the comment box. There is no comment in the comment box is there. If you not understand, please tell, then only I can accordingly. This part is not understand, this video is not understand, I create the video for accordingly to change that method to teaching it. So please interact with me in the comment section. Then only I might improve my video in the benefited for you. I hope the video is helpful to you. Thank you for watching. Thank you, Pradeep sir. Thank you.